If I told you the interest rate on your loan is just 10%, would you take it? Sounds reasonable, right? Now, what if I told you you're actually paying 18%, 22%, sometimes even 30% without realizing it? And the craziest part? Banks aren't lying. They're just not telling you the whole truth. Today, we're breaking down one of the biggest financial illusions ever sold to normal people. APR versus interest rate. This single trick has quietly transferred trillions of dollars from consumers to banks. Once you understand this, you'll never look at loans, credit cards, or EMIs the same way again. Let's start with what banks love to advertise. Interest rate. It sounds clean, simple, mathematical. Home loan at 8%. Personal loan at 11%. Credit card interest just 3% per month. And technically, they're not lying. The interest rate is simply the cost of borrowing the principal. Nothing else. No fees, no charges, no reality. Now let's talk about the number they hide in the fine print. APR, annual percentage rate. APR includes interest, processing fees, origination charges, service fees, insurance add-ons, compounding effects. In other words, APR is what you actually pay. Interest rate is the headline. APR is the bill. Imagine this. You take a $500,000 personal loan. The bank says, interest rate 10%. Sounds decent, but here's what actually happens. Processing fee 2%. Insurance bundled in. Monthly reducing balance trick. Compounding interest. Suddenly, your APR jumps to 17 to 19%. Over the loan term, you don't pay $500,000 plus interest. You pay $750,000 or more. And most people never notice, because the EMI feels manageable. Credit cards are where this illusion becomes brutal. Banks say, just 3% interest per month. Sounds small, right? But 3% per month isn't 36% per year, because of compounding. It's closer to 42 to 45% APR. Add late fees, add taxes, add minimum payment traps, and suddenly, you're working for the bank. Banks understand something most people don't. Humans don't think annually. We think monthly. Can I afford this EMI? Not, what is the total cost over 5 years? APR forces long-term thinking. Interest rate keeps you emotional and impulsive. That's why APR is hidden, and interest rate is shouted. Here's how you beat the system. Rule number 1, always ask for APR. If they hesitate, walk away. Rule number 2, compare loans using total repayment, not EMI. Rule number 3, be suspicious of low-interest offers with high fees. Rule number 4, if APR isn't clearly disclosed, it's expensive. Banks don't make money from people who understand APR. They make money from people who chase low EMIs. Interest rate is marketing. APR is reality. Once you see this, you're no longer an easy customer. If this video saved you money, imagine how many people around you are still trapped. Share this, because the most expensive education is the one you never get. Subscribe for more Finance Decoded. No noise, no hype, just the truth.